Mayank Agarwal, CEO of Gallantt Ispat, now joining in on the conversation. Mr. Agarwal, thank you so much for your time to us this morning on NDTV Profit. Let's just go through the quarter and if you can take us through why we've seen this weakness, hit on margins, hit on profits, hit on revenue all round. Was it a tough quarter because of raw material costs?
Good morning and good morning to all the viewers. Yes, this quarter, steel in general saw a lot of pressure from the realization and the demand side, and it is universal for the entire steel fraternity. And we were no separate, and we were hit too slightly by the revenues and the EBITDAs. If I talk about the numbers, the revenues fell by about 1,000 rupees a ton in this quarter, leading to a lower EBITDA. But at the same time, what was in our control was the sales, the sales volume and the production volumes, which we have seen a little bit of uptick in this quarter also and year-on-year basis also. However, when we look at the projections and when we look at the performance on the year-on-year basis for 9 months, the EBITDA for the company is 567 crores against 515 crores last year. So there is a jump of about 50 crores in the EBITDA absolute terms. And if we talk about per ton basis, the last year on year, if we compare it, it was about 8,000 rupees per ton of the margins in EBITDA, which is currently, despite all these issues in Q3, it has increased by 750 rupees, or almost 9% to 8,750 rupees per ton. So yes, despite all the issues that were there due to the market, we have seen a good growth in EBITDA in terms of absolute terms and also in terms of percentage terms. And that has also resulted in a better PAT of 9 months year-on-year basis, which was 285 crores last year against 360 crores this year. So overall, the company is, I would say, despite all the odds, have performed well. And we are all set to realize our business plans for the year. And
in fact, Mr. Agarwal, that was my question. Are you on track for that 5,000 crore revenue target? And for your margin targets, I think about 13% of your EBITDA margin guidance and your targets. Are you on track for that with the kind of quarter you've had?
So currently, the kind of uptick we have seen in the demand and the price realization right after Q3 in the entire of January, and which is still continuing. And I have no doubts that we would be able to almost reach our revenues and EBITDAs for the current year.
Mayank, good morning, Neeraj here.
Hi, good morning.
If you do 13% for the year, which means you are guiding to a very low EBITDA number for Q4, right? Because 9-month EBITDA looks much higher than that 13 number. So are you being conservative or with reason, or are we seeing a root shock in EBITDA in Q4?
So that was very well analyzed, sir. And yes, you are right. Currently, we stand at an EBITDA of I would say I'm being very conservative, and you will see a fantastic results if everything goes well. And we would surpass the expectations in Q4.
It just seems that everybody is talking about this being a good cycle now. We are entering in a bit of an up cycle for metals at large and even steel. So how do you look at, let's say, the next 12 to 24 months? I doubt it's possible to predict beyond that in the business you are in. But how do you look at the next 12 to 24 months?
So what in the last couple of years, what company is doing is that we are doing a lot of Capex, not only in terms of capacity additions, but mostly in terms of backward integration, operational efficiency, and capacity utilization efficiencies. So that is the reason that you see that despite all the negatives, the results are pretty promising, I would say, if we compare it on year-on-year basis. And if I talk about the market, so in the last couple of years, the company has been able to establish itself in a very respectable way in the market that we operate in, with a very good market share of more than 25% in the regions of UP, Gujarat, and etc. that we are operating. And despite all the issues in the last quarter in terms of demand and all, we had no pressure in terms of the volumes, at least. It is difficult to predict the future in the kind of business, as you said, we are in. But the Q4 looks promising, and what ultimately is in our hands is to ensure that we are able to optimize our operations in terms of efficiencies, costings, capacity utilizations, backward integration, and we are continuously making capexes on that, and we will definitely sustain and surpass, the projections that we have. Currently, if I would like to talk a little bit on capex side, which I think is important for the viewers. So currently, in the last year, we have acquired iron ore mines in Rajasthan, which would be supplying to completely to our Gujarat unit in future. And we have also acquired 2 iron ore mines in the current year, in Q2 of current year, in Uttar Pradesh, and which would 100% fulfill all our requirements in future for UP plant.
Okay.
So going forward, once the company is currently planning a very good capex size of about 3,000 crores
Sure.
in the next 2 to 3 years, which will be broadly funded by internal accruals because company is cash rich.
Sure.
And it basically includes all these capacity additions by 25% almost,
Yeah.
from 1 million to 1.25.
Yeah.
In both the units put together, a lot of capex going into operational efficiencies and capacity utilization improvements.
Yes.
And about 1,000 to 1,500 crores out of this is going into mines development, beneficiation, and pellet plants.
It sounds exciting. Mayank, we'd love to talk about what the implications are. And I think the next time we speak, perhaps we'll have a clearer idea of what that means, that backward integration, what it will mean on the cost side, because that should reduce your raw material costs and benefit your margin. So we'll talk about all of that the next time we meet. Thank you so much, though, for taking the time, and wish you all the best for the rest of the year as well.
Thank you so much.